For more than a decade, real estate has been one of the best performing asset classes in the world. Cheap financing, abundant liquidity, and strong demand have pushed prices to record highs across many countries. But every cycle eventually comes to an end. Today, I believe the real estate market is approaching one of those turning points. This is not a prediction of an immediate crash, nor do I believe every property or every region will behave the same way. However, the evidence suggests that we are entering a period where investors should become much more cautious. In this video, I'll explain why. Several macroeconomic forces are beginning to align. First, geopolitical tensions. Conflicts such as the recent escalation involving Iran create uncertainty, disrupt energy markets, and increase inflationary pressures. Second, inflation itself. If inflation remains elevated, central banks may be forced to keep interest rates higher for longer. That has two important consequences. Demand for real estate weakens because mortgages become more expensive. At the same time, developers face significantly higher financing costs, reducing profitability and slowing new projects. For over a decade, real estate has enjoyed one of the strongest tailwinds in modern history: exceptionally low borrowing costs. That tailwind is disappearing. Many investors assume real estate only goes up. History tells a different story. Property markets have always moved in cycles. Booms are followed by corrections. Recoveries are followed by expansions. One commonly discussed long-term pattern is an approximately 18 to 19-year real estate cycle, although the precise duration varies across countries and periods. Some cycles last 18 years. Others extend closer to 19. Regardless of the exact timing, the broader message remains the same. Long expansions eventually give way to periods of consolidation or decline. From my perspective, we are approaching that phase. Beyond economics, I also study financial astrology. One of the cycles I follow is connected with the orbital relationship between the sun and the moon. Their intersection creates what astrologers call the lunar nodes. According to astrological tradition, these nodes move through the zodiac approximately every 18 and a half years. My research suggests that when the nodal axis enters Aquarius, significant corrections have frequently coincided with important turning points in real estate markets over the past 2 centuries. Whether one considers astrology symbolic or causal is a personal decision. I simply present it as another lens through which historical cycles can be studied. In my opinion, both the economic cycle and the astrological cycle are pointing in the same direction. It is important not to treat real estate as a single asset. There are major differences between residential housing, office buildings, hotels, shopping centers, logistics facilities, hospitals and healthcare properties, student housing, data centers, and industrial properties. Some sectors may prove remarkably resilient. Others could experience significant declines. Likewise, certain cities or countries may outperform because of demographic growth, favorable regulation, or economic strength. Special situations also exist: forced sales, distressed assets, urban redevelopment, infrastructure investment. These often create opportunities even during broader market downturns. So this is not a bearish view on every property. It is a cautious view on the overall cycle. If the probability of lower returns in real estate increases, investors should at least consider whether their capital could work harder elsewhere. Different cycles favor different assets. Depending on market conditions, investors may evaluate opportunities in Bitcoin, gold, equities, selected commodities, and high-quality businesses. For example, if Bitcoin is emerging from a prolonged bear market while real estate is approaching the mature phase of its cycle, relative returns could differ substantially. The objective isn't to abandon real estate forever. It is simply to consider whether portfolio allocations should evolve as cycles change. Real estate has been an extraordinary investment over the past 50 years. Nothing in this video changes that. I am not suggesting that real estate is a bad asset class, far from it. What I am suggesting is that every asset class has seasons, and in my view, real estate may be entering a less favorable season. If that is correct, gradually reducing exposure and reallocating capital towards stronger opportunities may be worth considering. I explore these ideas in much greater detail in my book, Bitcoin, A View from the Stars, A Spiritual Companion and Astrological Primer. I also highly recommend the work of financial astrologer Christine Skinner, whose research has contributed significantly to the study of market cycles. If you enjoyed this video, subscribe to the channel, leave your thoughts in the comments, and I'll see you in the next one. Thank you for watching.